As 2025 drew to a close, European stock markets wrapped up the year with a subdued and mixed session, reflecting the cautious sentiment that often accompanies the final trading day. Investors and traders across the continent watched the markets closely, aware that the year's end is a time for both reflection and strategic positioning for the future. The atmosphere on the trading floors was noticeably quieter than usual, as many participants had already shifted their focus to the year ahead. This final session capped off a period of robust recovery and growth for European equities, with many indices having rebounded strongly from earlier challenges. Throughout the year, markets were buoyed by improving economic data, resilient corporate earnings, and renewed investor confidence, all of which contributed to a sense of optimism as 2025 ended. The last trading day was characterized by subtle portfolio adjustments and profit-taking, as investors sought to lock in gains and rebalance their holdings before the new year. Many market participants took this opportunity to review their strategies, mindful of the potential uncertainties and opportunities that 2026 might bring. Trading volumes remained low, partly due to the shortened session and the absence of major economic news or corporate announcements. With fewer catalysts to drive significant moves, most investors opted to stay on the sidelines, contributing to the calm and measured tone of the day. Attention turned to the annual performance review, with analysts and investors highlighting the standout sectors of the year. Biotechnology and defense stocks emerged as notable winners, benefiting from innovation and increased demand, while other sectors faced more mixed results, underscoring the diverse landscape of the European market. Major financial centers like London, Paris, Frankfurt, and Milan all posted mixed results on this final day, symbolizing a market that was taking a well-deserved pause after a year of strong gains and significant milestones. Despite lingering global economic questions, the resilience of European equities was evident. Investors remained cautiously optimistic, drawing confidence from the region's ability to adapt and thrive in a rapidly changing world. As the closing bell rang on New Year's Eve, the mood across Europe's financial hubs was one of accomplishment and cautious optimism. With 2025 in the books, market participants looked ahead to 2026, hopeful that the momentum of recovery and growth would continue into the new year. The Stoxx 600 index, tracking Europe's largest companies, dipped just 0.1% on the final day, a natural pause after hitting a record high the day before. Tuesday's 0.7% surge capped a powerful year-end rally, with investors cashing in recent gains. The index's annual journey was marked by steady growth, overcoming geopolitical and economic headwinds. Sectors from technology to consumer goods contributed to the broad-based recovery. The slight retreat on the last day was seen as healthy consolidation, not a reversal. The record high remains the defining feature, signaling renewed investor confidence. The minor dip was merely a footnote in a year of impressive growth, setting a positive tone for 2026. Beneath the surface, national indices told a more nuanced story on December 31st. Germany's DAX rose 0.6%, reflecting strong confidence in its industrial sector. Italy's FTSE gained 1.1%, capping an extraordinary year driven by a banking sector resurgence. In contrast, France's CAC 40 and the UK's FTSE 100 both slipped 0.2%, as investors locked in profits. These small declines reflected light trading and end-of-year adjustments. The divergence among Europe's major markets highlighted each country's unique economic drivers. Germany and Italy finished strong, while London and Paris paused after robust runs. This mix underscored Europe's diversity, even within an integrated economic bloc. The final day's moves illustrated how national stories shape the continent's financial landscape. Despite a mixed final day, 2025 was historic for Italy and the UK. Italy's FTSE soared 31.5%, its best year since 1998, thanks to a banking turnaround and renewed investor confidence. The UK's FTSE 100 jumped 21.5%, its strongest performance since 2009, fueled by commodity recovery and strong multinational earnings. Both markets outperformed global peers, signaling resilience and renewed appeal. Italy's rally shed its reputation for volatility, while London reaffirmed its status as a global financial center. Gains were broad-based, lifting multiple sectors and restoring faith in these markets. Investors were reminded of the opportunities in Europe's diverse markets, especially those previously overlooked. For shareholders in Rome and London, 2025 was truly a year to remember. On the final trading day and throughout the entirety of 2025, a few sectors truly captured the market's attention, standing out from the rest and driving much of the year's excitement. Investors and analysts alike watched closely as certain industries surged ahead, fueled by global events and groundbreaking developments. Defense stocks, in particular, were a major story. Companies like Saab, Rank, and Rheinmetall saw their shares climb by 2 to 3% on the last day alone, capping off a year of extraordinary performance. Some of these stocks posted annual gains as high as 193%, a testament to how rising geopolitical tensions and increased defense budgets can rapidly transform the fortunes of an entire sector. Meanwhile, the biotech sector delivered its own headline-grabbing story. The French biotech firm Abivax emerged as the year's breakout star, surging 3.8% on the final day and an astonishing 1,616% over the course of the year. This meteoric rise was fueled by breakthrough clinical trial results that captured the imagination of both investors and the medical community. Abivax's performance was a vivid reminder of biotech's high-risk, high-reward nature. The company's success underscored the transformative power of medical innovation, where a single scientific breakthrough can send a stock soaring and reshape the competitive landscape overnight. Persistent buyout rumors swirled around Abivax, keeping its stock firmly in the spotlight and fueling further speculation about the future of the company. Mergers and acquisitions became a hot topic, as larger pharmaceutical players eyed innovative biotech firms for potential partnerships or takeovers. The defense sector's impressive gains were also driven by increased government spending, new contracts, and a renewed focus on national security. As governments around the world responded to shifting geopolitical realities, defense companies found themselves in high demand, securing lucrative deals and expanding their operations. Both the defense and biotech sectors demonstrated how global events, innovation, and timely decision-making can lead to outsized returns for investors. Their stories were a powerful illustration of how quickly market dynamics can shift, rewarding those who are able to anticipate and adapt to change. Ultimately, the remarkable success of these sectors highlighted the critical importance of thoughtful sector selection and diversification in a constantly evolving market. For investors, staying informed and agile proved to be the key to capturing opportunities in a year defined by both uncertainty and innovation. Not all sectors ended the year on a high note. Fresnillo, a London-listed precious metals miner, dropped 2.3% after a previous day's rally, as investors took profits amid falling silver and gold prices. Broader mining stocks like Anglo American and Glencore held steady, showing resilience in industrial metals. The sharp drop in silver prices hit precious metals miners hardest, while diversified peers fared better. The day's moves highlighted the volatility and commodity sensitivity of the mining sector. Even in a strong year, individual stocks diverged based on their exposure. For traders, it was a reminder of the risks and rewards within the sector. Precious metals faced a sharp sell-off on the final day of 2025. Gold futures fell 1.4% to $4,327 an ounce, while silver plunged 8.4% to 71.40 wands. The declines reflected profit-taking, a stronger US dollar, and a shift toward riskier assets as equities soared. Lower liquidity in holiday trading may have amplified the moves. The retreat capped a volatile year for precious metals, which had previously benefited from uncertainty. As equities finished strong, the appeal of gold and silver waned. The sharp drop left investors questioning whether this was a blip or a new trend for 2026. As 2025 drew to a close, European markets reflected a cautious and somewhat subdued global sentiment. Investors across the continent were keenly aware of the shifting tides in international finance, and this awareness was evident in the measured pace of trading. The mood was not one of panic, but rather of careful consideration, as market participants weighed their options and looked ahead to the uncertainties of the new year. Over in the United States, stock futures signaled a fourth consecutive losing session, a rare streak in an otherwise strong year. Despite this late-year pullback, the S&P 500 managed to post an impressive 17% gain for 2025, marking its third straight year of double-digit returns. This performance underscored the resilience of the American market, even as investors took a step back to reassess their positions. The recent dip in US stocks was widely interpreted as a round of profit-taking, rather than a sign of deeper weakness. After such a robust rally, many investors chose to lock in gains, preferring to end the year on a high note rather than risk potential volatility in the final days of trading. Meanwhile, in Asia, most major indices experienced declines, with trading activity noticeably lighter than usual. The subdued atmosphere was partly due to holidays in Japan and South Korea, which kept many traders away from their desks and contributed to thinner volumes across the region. Both Hong Kong and Australia wrapped up their trading sessions early, further reducing overall market activity. The early closures meant that fewer trades were executed, and the markets lacked the usual energy seen during more active periods. Globally, a mild sense of risk aversion set the tone, with investors everywhere showing a preference for caution over bold moves. This collective mindset contributed to Europe's muted finish, as traders took cues from developments in other regions and adjusted their strategies accordingly. With little in the way of fresh catalysts or external momentum, European investors largely followed the global lead. Many chose to trim their positions, secure profits, and adopt a wait-and-see approach as the year wound down, mirroring the actions of their counterparts in the US and Asia. The quiet, almost synchronized end to the trading year was a shared experience across continents. It served as a reminder of just how interconnected global finance has become, with events in one region quickly influencing sentiment and decisions in another, shaping the rhythm of markets worldwide. As the bells fell silent, 2025's mixed final session faded behind a year of extraordinary growth for European markets. The Stoxx 600's near-record close reflected renewed confidence, strong fundamentals, and robust corporate earnings. Italy and the UK posted their best gains in decades, restoring faith in Europe's potential for world-class returns. Defense and biotech stocks led the way, while mining's volatility underscored the importance of sector selection. The year rewarded optimism and strategic insight, proving the health and appeal of European equities. From Milan to London, 2025 was a story of resilience and success. Investors now look to 2026 from a position of strength. The lessons of 2025 will shape strategies for years to come.